Good morning, guys. Hope you're doing okay. It's early in the morning. In this video, I'm going to be explaining break of structure. There's so many misconceptions about break of structure in the market, and this is the way I use it, and this is the way it works for me. I've also created a free school community where we talk as traders about each other's issues and how we grow. I also teach in the school community, and I hope to see you there because we do live calls also. So enjoy the video, break of structure, and hope to see you at the free school community. Have a good day.
Good morning, guys. Hope you had a great weekend. I'm gonna explain, it's early in the morning. I'm an early bird, believe it or not. I'm gonna explain break of structure right now in this video. So in this video, you're gonna understand break of structure and how it works. There are so many definitions in the market. Like I've seen so many explanations of break of structure. What is break of structure? You're wrong and I'm right, and I'm right and you're wrong. It doesn't matter. I'm gonna explain it to you so basically, so you will not be able to stop see it in the market. This is what a break of structure is. A break of structure is telling us where the market is about to go. It happens on the higher time frames, it happens on the lower time frames, and it happens as an indicator for us that the market's it's about to change structure because it's breaking the structure. Break of structure. BOS. So, what does the break of structure mean? The break of structure in the figure, what we're saying, let's see, if I draw out the market structure right here, this is what a break of structure is. There's a break of structure that's happening from a low and closing in under the body of the candle of the low of the candle next to it. Because it's telling us, because if you see these areas, there is no break of structure right here, there is no break of structure right here, and there is no break of structure right here, which makes it likely wanted to continue bullish. So we want to see a break of structure like this for it to give us an indicator like, you know what, it's going down. Why? Because it broke structure on this area. So break of structure is explained very easily in this figure right here. Is what the market does. It creates a high, it creates a low, it creates a high, it creates a low, and then it creates another high, and then another high, and then it continues. Maybe it drops back down, and it continues. This is the area. Is the area where you want to mark out the high being closed over the body over the body of the candle, not the candle itself. That's so important. Over the body of the candle. Let me show it to you in the charts so you get where I'm coming from. All right, let's go down to the 1 minute because we have more break of structures in the 1 minute. I'm going to show you some examples for you to get what I mean. Look at this. So just the market is going where? We're going bullish. And the market, what does the market wants to do? Like I spoken on the previous session talking about liquidity, the market wants to take out liquidity because the liquidity is where the market makers are making their money. And we want to trade like the banks and institutions. We want to take out liquidity together with the banks and institutions, and then we want to reverse bullish or bearish. So what does the market do right here? The market takes out liquidity, it swipes liquidity. I usually don't do this, I use this. It swipes liquidity, and then we are waiting for it to break structure. Where? Probably because this is a low, we want to break structure and then reverse back. And what does the reversal mean to us? We're waiting for a break of structure to wait it to reverse on the other side. So we're waiting for a high to be created after the liquidity, not before. The high needs to be created after the liquidity, and the body. See here, this is where most people get it confused. You see a, sorry about that. You see a low. It's created a high. No, I'm gonna make it clear. You see a low being created, and the other candle here is the low of the candle is the low of both of the candles. So this is not the low. This is not the low, and there's a high, and there's a low, because it's a high created from two candles. So the high, even if the color of the candle is different, the high of this is not this, is not this high because it's a green candle or blue candle, is this one because it's one it's two candles together. So this is the high. It's like this one. This is the high. It's like the second one next to it. This is the high. So it's the same thing right here. There's a high being created right here from this candle, and we are waiting for it to break structure to the upside. Break of structure. We are waiting for it to close under the over the body of the candle next to it. So the candle next to it, when it closes, we see the clock ticking down. This is where we take a trade. We put our stop loss underneath these liquidities right here, and we mark out what? We mark out liquidity because the market is going where? It's going to take out liquidity and then reverse back down. All right. So we take our first take profit maybe right here, and then we continue and let it run. Maybe not here because the risk reward was bad, but we wait for it to take out liquidity in the market. Where is liquidity in the market? If we go to the left side, I see liquidity right here. Up, up. What does the market want to do? It usually wants to do take out liquidity and then reverse back down. Or it wanted to not give us a reaction from this area, it want to give us a reaction from this area because there is liquidity also here. So what do? We go to the market and we wait for it to take out liquidity. Pop. What does the market do? It goes up. It goes up, takes out liquidity, and continues down. And see what happens here in this area. It takes out liquidity. It breaks structure right here again. So you can make money on this area. You can make money because why? Took out the high of the liquidity right here. What does the market want to do? Take out liquidity and reverse back down with a break of structure. So it takes out liquidity. It closes the body of the wick of the candle closes over the body of the candle. And what does that mean? This is the pro tip. If the close is like this, if the close is like this is not a break of structure. Don't trust it. This is just coming from observations trading the market for years. So we wait for it to we basically we don't trust this candle. So what do? We wait for the other candle to do a break of structure. We wait for the other candle to do a break of structure, and we take the trade from this candle close right here. This gives us a fairly larger break of stop loss than this area. We could make more money from taking a trade like this, but we want to go with the highest probability trades. And what does the market do? The market goes down, it takes out liquidity. Right here, we mark out the liquidity as take profits. Right? 2 to 2.8, 2 to, let's say 3. You know what? Let's say 2. This is so easy. This is so easy. So I risk 1% to gain 3. And here you risk 1% to gain 2. Is it worth it? Yes. Let me show you another example. Last one before I hit the road. See, we marked out this liquidity right here in this area, but it didn't get swept. Why? Because it was liquidity on this area that swept it and it took it out. So what are we waiting for on the next session? We're waiting for it to take out liquidity. So this is the market open right here. So this is the daily at 9 o'clock. Mark it out. It took out liquidity. See, took out liquidity. It didn't break structure. It didn't break structure. It didn't break structure. Did it break structure right here? Yes. So what does that mean? We take a trade, enter off of it. This is a good trade, but this is a good one, see? And it continues to the liquidity part right here. And we don't usually wait for this area to be swept. We usually take off it might reverse from this area, so we take off a little profit. It might reverse from this area, so we take a little more profit. It might reverse from this area, we take a little more profit. Okay, this is liquidity being explained. If you have any questions, feel free to leave them in the comments below, and feel free to write what you learned from this video in the comments below, because if you teach it, it will stick with you even more. Good luck and have an amazing day.